please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Straight to all the action on Dalal Street, the stock market saw a sharp recovery after reports suggested that Prime Minister Narendra Modi may hold a high-level meeting over the weekend to take stock of the state of the economy. Now, this meeting gains importance given multiple recent shocks, including the rupee's weak streak and a steady rise in retail fuel prices. Nifty's midday recovery received a second wind when the Commerce Minister Suresh Prabhu let slip that the India's fiscal deficit had narrowed to a $17.4 billion in August. Now, this helped the index reclaim 11,350. The Sensex ended the day over 300 points higher, and the mid-cap index managed to reaffirm its hold over 19,000. Now, the rupee remains our top focus this Wednesday evening. The currency opened 11 paise lower at 72.80 to the dollar and went on to hit a fresh record low of 72.91. But however, it recovered more than 60 paise on the back of news that the Prime Minister will hold a meeting to discuss the country's current economic situation, as well as movements in the rupee later this week. Now, the currency has been under pressure over the last many sessions due to a global crude rally and outflow of capital owing to trade war fears. So far, it is down 13.81% year to date. Lata Venkatesh joins us now. Lata, so just shy of that 73 mark, we've seen some form of intervention. Also, sentiment seems to have turned on the back of news that the Prime Minister will hold an economic review meeting. What are you making of the rupee's trajectory today?
Well, we've seen some, steep falls over the past several days, and along with it came rises in bond yields, because as imports become expensive, the consumer price inflation would go up, and the expectation was that therefore interest rates also will go up. And we saw yields today spiking to as high as 8.21. That's a 4-year high, a number we saw last in November of 2014. So it is mouth-watering at 8.2 for a foreign investor to come and buy an Indian bond. India is not a banana republic. The currency would be maintained. And therefore, it looked like it was ripe for a correction. But what really turned the tide was that catalyzing event of just the announcement that the PM is going to have an economic review meeting over the weekend, which may discuss the rupee and which may discuss fiscal and monetary measures to help the rupee. Now, we don't know, we don't have very clear idea of the agenda or the timeline at, by when steps will be announced. But the rupee was seriously oversold. It was becoming an easy short sell. Exporters with dollars were just not willing to let go. And the moment this news came, everyone with long dollar positions, largely trading desks and banks, as well as exporters, just let go because steps are going to come. The announcement was enough. And thereafter, we saw a rapid fall in the price of the dollar because everyone was selling it. And of course, that coincided also with the equity market rising. The point is, as FII sold equities, and that was falling the rupee. Because the rupee is falling, people were selling equities. And likewise, the bond also was going down. Bond investors also were feared to be selling off. Now at 8.14, clearly the bond market also is registering the fact that imports will not be as expensive as we thought it would be when it would be 73.
Absolutely, Lata. So the rupee there recovering from record lows. But Lata, hang on. Let's now shift gears. India's trade deficit in August has eased marginally thanks to a pickup that was seen in export growth. The deficit now stands at $17.4 billion, which is lower than the $18 billion that was clocked in July. So what do you make of this number, Lata?
Well, I think it was very important for us to get a lower trade deficit number than the previous month. 18.02 was seriously, a 6-year high, and anything lower than that would have assuaged. Nobody expects the expensive rupee to bring the expensive dollar to bring down the imports in 1 month. We should see a more stark impact perhaps when the September numbers come out, because the bigger fall of the rupee happened in September. But, the deficit falling even by $500 million from 18.0 to 17.4, that's a good $800 million of fall that, we could take with both hands. And then, as you pointed out, exports also have grown by a decent about 19.5, 20%. imports are still growing very steeply at 25%. And mind you, imports are a bigger base. Over a base of 35 billion, they've grown by 25%. So 45 billion is not a comfortable number. It's because of high crude prices. But one hopes that in the coming months, especially September, because imports will be prohibitively expensive, we could see the rate of growth of imports fall and therefore a steeper fall in trade deficit.
Right, Lata. Thank you so much for those details and taking us through those numbers. Now, moving on, the Union Cabinet has taken new steps in a bid to ensure farmers get the minimum support price for their produce. Now, the centre has cleared a new procurement policy to provide compensation to farmers if they sell below the MSP. Another project will be launched on a pilot basis to allow state governments to rope in private players for procurement. Manisha Gupta is here with more details. Manisha, can you explain to us how this new procurement policy will work?
Well, yes, thank you so much for that. MSP had been hiked in the month of July, and we have seen the procurement policy being announced today. That, of course, has been a big cabinet announcement that came in today. So there are three schemes, basically, that the central government is looking to ensure that the MSP is implemented and the farmers get their due. The first one, of course, is the price support scheme. Now, this is something that the Indian government or India as a country has been following for the longest time. The government agencies will procure on the request from state governments of the crop that they want to ensure procuring. As I said, this is an already existing scheme, but until now, only a few states and only a couple of crops like wheat and rice have been procured. Well, the government says that they will be adding other grains like ragi, bajra, jawar, etc. to this. So this is a scheme that the government understands completely and does it via the state government agencies. So this is something that would continue to go on. The second scheme is something that is a price deficit scheme. This is about compensation to the farmers for sale below MSP. This scheme for the first time was put in by the Madhya Pradesh government. They enacted it last year. They abandoned it. They have picked it up again this time around. And the other state governments also have shown interest in using this scheme. The important thing is that the farmers have to register with the government to ensure participation of that scheme. And in the other state governments, we haven't seen so much of an interest for the farmers coming in for this. Another important thing is that it's only oil seeds that this scheme actually undertakes at this point in time. No other commodities are encouraged or entertained as of now under this scheme. This is the latest and the first time that this has happened in India is that the private players are encouraged, are now allowed to come out and procure on MSP for various commodities. Earlier, whenever it has been done, the private players procure and they do it for the government. But this time around, they would be doing it for themselves, and the private players, it would be at their discretion on what commodities, how much they want to procure and when they want to sell it as well. So this clearly is something that the government is doing for the first time. Private players have been encouraged, and they would be incentivized in various ways if they want to actually procure at MSP. So that clearly is a big one coming in for the industry.
Absolutely. It is a big one coming in for the industry. Thank you so much for those details, Manisha. In fact, Manisha caught up exclusively with Agriculture Secretary Shobhana K. Patnaik to discuss the details of the Cabinet's decision regarding the minimum support price mechanism. Here's an excerpt of that conversation.
My question really, first of all, is about the private procurement and stockist scheme. This is the first time that this is happening. How do you look at the supporting reforms onto this one? What kind of proposals still are being awaited to ensure that this becomes a reality?
See, the government believes in really encouraging the private sector to come in a very big way into the areas of, giving fair prices, fair and remunerative price to the farmers. And we are also aware that in the oilseed sector, there are big players and they have got a lot of space which is available to really, procure, stock them, and also do value addition to convert oilseeds into oil and sell it at the right appropriate price to the consumers. So we would like to tap on their expertise as well as their willingness to participate in this venture. So for the first time in the history of our country, we want to launch this new scheme, which is called by the name of the Private Procurement and Stockist Scheme. And when this scheme was announced, we also would like to incentivize the private sector by giving them some support. And they will be procuring at the MSP value. They will be storing it, and they're free to sell it at whatever point they want to at a later date. and there will be no restrictions on sale. They can export. They can do whatever they feel like.
What kind of incentivize, what kind of incentivification are you looking to give to them? Is it going to be on the tax part of it, or some reimbursement? How is the government working on that?
No, actually, the administrative support cost up to 15% will be. We will bear it in case it is justified with suitable this thing. And secondly, we will also like to one of the industry has been always speaking about stock control order being applied on them. So to that extent, some regulatory measures which exist that will be relaxed for in case.
In fact, it's not only that. The cabinet has also decided to hike ethanol prices, which has come as a big relief to the sugar industry. Ethanol prices was increased by 25%, and for the first time ever, ethanol was made from sugarcane juice is hiked from 47.5 to 59 rupees.